Angel Montesclaros, Analyst for Market Insights Asia Pacific. I have been in the industry for 7 years now as a financial trader, coach, and analyst. I'm also a licensed educator with a 5-year teaching experience. On behalf of Market Insights, I want to welcome you all to a 20-session webinar series that will teach you the foundation of trading. It will cover everything from fundamental analysis all the way to trading psychology. At the end of the series, our subscribers are expected to have a good understanding of the basic foundation of trading and some easy strategies they can do on their own to create a stable profit. I hope you're all ready. Let's begin. So here are our agenda for the 20-session webinar that we're gonna have. First is Introduction to Forex. Second is Fundamental Analysis, Intermarket Correlation, Sentiment Analysis, Technical Analysis, Trading Plan, and lastly, we have Trading Psychology. So let's start first with Introduction to Forex. Financial market has a lot of branches. Although the learnings from this series can be applied to most markets, please take note that it is geared towards Forex trading. So what is Forex? Forex, foreign exchange or currency market, is a global decentralized or over-the-counter market. There are two words here that you need to understand: decentralized and over-the-counter. Decentralized or over-the-counter means no single authority has control over the entire market. For a better understanding, let us compare it with the stock market, which is centralized. So in the US, the New York Stock Exchange acts as a market which connects all the buyers and the sellers. On the other hand, Forex trading is decentralized. No one organization oversees it. Instead, it uses technology which allows market participants to trade directly with each other. Securities are traded via a network of brokers and dealers instead of a centralized exchange. The Forex market, being both decentralized or over-the-counter, has pros and cons which I will explain later. Next, it determines the foreign exchange rate. Have you ever wondered why the foreign exchange rate among the banks are slightly different from each other, but are generally moving towards the same direction? It is because they all adhere to the prices the Forex market has. So the small difference is because they put a premium on both buy and sell prices to make some money. Everybody makes some money, right? We all need some money. Now, next. Forex trading includes all aspects of buying, selling, and exchanging currencies at current or determined prices. So if you're happy with the present prices, you can trade now. If you're still waiting for a price to come, or if you're not happy yet, you can place your position in advance. So either way is okay, as long as it suits your trading strategies and preference. It is the largest, most liquid market in the world, with a daily average trading volume of 6.6 trillion US dollars. So how big is 6.6 trillion? The New York Stock Exchange has an average trading volume of 18.9 billion per day, making the Forex market 350 times bigger than the New York Stock Exchange. Liquidity means the ability to buy and sell an asset with ease. So let me try to explain it to you using my personal experience. So my Forex trades, they usually happens the instant I buy or the instant I click buy or sell, whatever it is. The worst liquidity I experienced so far was when I traded Philippine stock market. So I actually spent the entire day waiting for my shares to get sold or waiting for my shares to be closed. The most anxious part is, well, it's okay if I'm selling and the price are rising, right? But it's actually falling. So I was watching the value of the shares go down and down and down, and my trades are still in the market. I was still able to close it, but it's far from my expected take profit. So in Filipino, we call it naipit. You got stranded somewhere there. Now, you might be wondering why Forex market is so liquid. It is because it's decentralized and over-the-counter. So everyone who trades Forex is connected with each other over an intricate and elaborate network of interbanks and brokers. So technically speaking, as long as someone is willing to trade with you, it doesn't matter where they are in the world. It also doesn't matter if it's outside business hours. Your trade will still go through. Speaking of, the Forex market is open 24/7 for institutional traders and 24/5 for retail traders. Since the majority of us are retail traders, the market is open for us 24/5. Let us take a look at the map. This map. Please take note that this map is adjusted to GMT plus 8 Singapore time. As I mentioned earlier, everyone who trades Forex is connected with each other over an intricate and elaborate network of interbanks and brokers. So as long as there is a bank and a broker operating somewhere on earth, your trades will go through. So geographically speaking, the countries within the continent of Oceania go through the day the earliest compared to the rest of the world. So once the clock hits 9 a.m. in this region, the Forex market is awake. This time zone is known as the Australian session. Being Australia, the largest economy in this region. Next, in the middle of the Australian session, the Asian session will start. The Asian economy is represented by Japan. So by lunchtime in the Asian session, the Australian session will end. So we still have one open, which is Asia. Then 2 hours before the Asian market sleeps, the European market wakes up. The American session starts in the middle of the European session. So lastly, at the exact time the US session closes, the Australian session starts. So as you can see, when one market closes, another one opens up. So technically, the Forex market is open from Monday 5 a.m. to Saturday 5 a.m. GMT plus 8. I have attached a link below where you can convert my trading hours map to your local time. This is actually the feature of Forex trading that I love the most, especially when I was starting out. I can keep my day job, which is I'm a teacher before, and then practice trading at night, no problem. So my friends who are into stocks, they got to have a special set of skills to be able to do their day job while trading at the same time. The special skills is actually practicing alt tab. You cannot be seen by your manager trading during work. Well, the worst scenario is if you're at work, you might miss some huge market movement because you're practically doing something else, right? On a side note, the Forex market will continue to move while you are sleeping. It's not gonna wait for you. So it's very important to put a stop loss and take profit on each of your position. So now that I have established how the market is open 24/5, please pay attention to the colors on the map. A light green time frame suggests that one major market is open. Typically, this is the time when the liquidity is lightest. When two major markets are open simultaneously, the liquidity is higher. On specific time frames where there are three major markets open at the same time, the liquidity is the highest. So I use the word typical or typically because if there is a new market update with high importance, the market is sure to move. So it doesn't matter if the market or everyone else is sleeping or majority of us is sleeping. If something big happens, the market will be awake. Liquidity will be there. So now that you have understood what Forex trading is, what are the things that you as a beginner or an aspiring trader must have? So first, we have here is proper education. Being in the industry for 7 years, I have seen and heard a lot of stories, success and failing stories. So the common denominator of those who lost trading or lost money in trading is that they did not spend time and effort learning to trade. So do you know what is the difference between an investor and a gambler? One word, education. Well, you do not need a 4-year degree to learn how to trade. You just need to determine what kind of student you are so you can find the learning method that works best for you. So the diligent students like myself and self-sufficient may try to learn on their own. There are tons of materials online that you can utilize. Even this webinar is for free, so you can learn on your own for free, right? Well, but there is another way which is the easiest and most reliable, in my opinion, which is finding a trading school or mentor to guide you. Well, if you have, let's say you enroll in this trading school, you have a question, you could ask, right? Unlike when you're learning on your own, it's hard to ask questions because when you ask the community, the people giving you answers from the community, they may be right, they may be wrong, you do not really know them. So you could take their answers with a grain of salt, something like that. But the downside is if your learning method is based on attending a trading school or having a mentor to guide you, it's not for free. The prices could be affordable to very expensive depending on the school and the mentor. So really doesn't matter whether you're paying or not paying, learning on your own or have a guide. The bottom line is you should be equipped with proper knowledge before making any trade decision. One good thing is we have what we call demo accounts as well. So if you're not comfortable yet or confident yet to trade live money, you could practice with demo, which usually follows the pricing of live market, right? So second, stable internet. I was a budding young trader back then when I realized this is important. It was my first non-farm payroll. It was a huge movement, even until now, right? So before, during, and after this data's release, market goes crazy. So I remember trading USD JPY because that's my favorite currency before. I can't remember really if it's a buy or a sell. I just remember placing it right after the data was released. So, seconds or minutes after my trade came in, I lost my internet connection and I have no mobile data to back me up. So, I pulled up my router, wait for a few minutes, put it back in the power, restart it, try to get internet back, and then probably around 5 minutes or so, I'm back. The prices are way, way out there. Well, it's good if I'm making money, but I am not. um, I actually lost $2,000 that night. So that's why it's very memorable to me because it's my first live trade for a non-farm payroll and I lost money. Huge money. So, moral lesson of the story, if you want to trade online in the convenience of your home or wherever remote location you are, invest in a stable internet. And if you're in a place or in a country like Philippines and your wired internet connection is not that stable, you have to invest in a mobile data backup just in case. Now, you might think I only have horror stories for internet connection. I also have a not so fun trading experience due to my computer. So I wasn't a techie person back then. Well, I'm not still techie now, but I manage. And my computer being old or not that fast, it always crashes. I'm not sure if it's because I'm using Mac back then or I'm using a free converter app back then. I'm not really sure why, but it would always crash. And I have to always go to my good friend Saski. Hey, Saski, shout out. To have my MP4 reinstalled on my computer again. So when I made my first profits in training, one of the earliest investments that I did is to invest in a good computer. Now, MP4, it depends on what kind of trading you are doing. If you have EA, or you're trading frequently, I recommend at least i5, Intel Core 5 or higher. That's the recommended for me. I don't really think that it's gonna work if you have a lower end. Please do not use Celeron. It's not gonna work. But at least Intel Core 5 and higher, that would be good enough for a good execution on the MT5, MT4, or whatever platform you're using for trading. So, you see, if your computer is crashing, that's actually okay. If you don't have any live trade or open trade at the moment, or the market is quiet, nothing's happening. But imagine the stress if you have an open trade and your MT4 crashed. right? It's a horror story. So lastly, reliable broker. Every trader should have, guess what? A reliable broker. Remember our discussion earlier about how the Forex market is decentralized and over-the-counter market? It has both pros and cons. So let's start first with the pros. A market without a central authority is hard to influence. It reduces the risk from hackers, well, because there's no single target to infiltrate, right? It also provides better transparency because all market participants agreed to use the same technology. So in our case, most of us are using what? C-Trader, MT4, MT5, right? So no big deal. Lastly, the absence of intermediaries means less transaction cost. Now, on the flip side, the lack of central authority to oversee the entire market has paved way for some gray areas. First, that's the first. Second, it provided less legal and financial protection to market participants. So, in line with this, there is an uptick in the number of scam brokers. There are multiple ways they can take their victims' money. They could pretend to be a holder of a license offshore when in fact they're not. They could even be a duly licensed broker, but they are cheating their clients from the inside. So, here are some tips that I can share to check if your broker is reliable or not. First, check their license. So every legally registered broker is required to have their license information available on their website. The certificate of registration should be available to their clients. So just like every businesses that are required to put on their business plates in their stores, the same with Forex brokers. Now, you could check that by going to the jurisdiction's website. You could check the authenticity there. Second, promotions that are too good to be true. Depending on the licensed jurisdiction, some brokers are allowed to provide trading bonuses or credits. But if your broker is offering something too much, remind yourself that, quote unquote, there's no such thing as free lunch. It could be a typical Ponzi scheme. So based on my knowledge, usually in general, I'm saying in general, right? Because every jurisdiction is different, every license is different, but in general, brokers are allowed up to 20% deposit bonus. That's the usual. Now, if they're offering you times 2, times 3, whatever percentage it is, then ask yourself, is it really a good deal for you or not? Third, all brokers are legally required to conduct KYC or Know Your Client in compliance with the anti-money laundering law. So if your broker is only asking for money and not your legal identity, chances are they're not regulated. Usually the regulated ones, we're kind of crazy with compliance. So they're gonna ask you like identification, proof of address, this should match, should be valid, not expire, blah, 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 something like that. Fourth, prices are way off from competitors. So, you could create accounts just to compare, right? But as an easy access, you may also check tradingview.com. So, you could check the prices there. And you would see that the prices for each broker, they are slightly different from each other. But in general, they should be moving towards the same direction. Why the prices are different? Because each broker is actually free to charge whatever commission they wanted from their clients. So that's where the difference is getting from. But the direction should be the same. So if brokers A and B are all going up and broker C is going down, then there should be a problem with broker C. Right? Number 5, employees are too aggressive or persistent for a deposit. Now, all of these brokers, they need their clients to deposit and trade in order to earn money. So, of course, they would give you something, right, to help you trade live. They have like free education, they have market analysis, deposit bonus, copy trading, etc. And those are legal, by the way. But if you're receiving multiple text calls or emails within the day, and the way they sound is like trading has no risk, is as easy as breathing, or it's very passive, you can make 100% in a month, blah, blah, blah. Run away. Because that's another typical Ponzi scheme characteristics. Forex trading, it has risk. Everything that makes money for you has risk. So, if someone is telling you it's risk-free, by the way, that's illegal. From the license, it's illegal to say that it's risk-free. But if they're saying or sounding off like that, then probably they're not really regulated. And then lastly, read some reviews online. Please take note that reviews online are not 100% true. There are stories where reviews are being bought by brokers, or they are paying someone to write negative or nasty comments for their competitors. But in general, if the majority of the reviews are not so well, what I recommend is do more research, or you could stay away from that. Right? Or if you know someone who is already on that broker, ask their opinion, ask their experience. Or you could trade small. Try it first and then see it for yourself. Because sometimes every experience is different, right? Okay, so these are the things that aspiring traders should have. Now, what are the assets that you could trade in this market? Well, even though in general this is called Forex brokers, there are other assets you can trade with them. There's actually four types of assets that are usually available. So first thing, of course, are the currency pairs. So the most popular ones are called major pairs. These are the currencies of major economies paired against the US dollar. So what are the major economies or currencies? So US dollar, Euro, Pound, Australian dollar, Canadian dollar, Swiss franc, Japanese yen, and New Zealand dollar. So these are the major currencies. So all of those paired with the dollar, that's the major currency pair. For example, Euro and USD, that's Euro USD. Australian dollar and USD, AUD USD. Japanese yen and USD, USD JPY. Now, if you trade a major currency against each other, excluding USD of course, they are called minor currency pairs. Examples are Euro and Yen, Euro Yen. New Zealand dollar and Australian dollar, NZD, AUD. And for example, Pound and Swiss franc, GBP, CHF. Now, if you're into adventure, you may also try to trade exotic pairs, so currencies that are outside major and minor currency pairs, such as the Chinese yuan, the Turkish lira, and Mexican peso. Now, second, aside from currency pairs, you could also trade commodities. Commodities are priced in currencies, so it's easy to trade, right? The most popular ones are actually gold and oil. Although some brokers, they also offer silver and platinum, something like that, but not available all the time. Usually, what are available are gold, silver, and oil. Now, oil, there are different kinds of oil. We have the West Intermediate oil, which is WTI USD, and we have the Brent oil, which is XBR USD. Now, third, aside from commodities, we have indices. Now, to understand the idea of indices, imagine buying a share of multiple companies into one single asset, right? So, for example, S&P 500 or US 500, this tracks the performance of 500 large cap companies in the US. So, instead of buying individual companies, we're actually purchasing the stocks for all of these 500 companies in one, right? Another example is the FTSE 100 or the UK 100, which measures the performance of 100 blue chip companies listed in the London Exchange. Now, fourth, we have the cryptocurrencies. Now, I would like to emphasize that cryptocurrency trading on a Forex broker is a derivative trade. So, Let me break it down a little bit, right? A cryptocurrency exchange such as Coinbase or Binance, right? They have spot and derivative trading on their platform. You could see there is a huge difference there. So, as a quick differentiation, spot trading means you're buying and selling the actual underlying asset in the trading pair. So, for example, Bitcoin USD, and you're buying the actual Bitcoin and you're selling actual USDT. You gotta have USDT on your account to buy Bitcoin, right? Derivative, on the other hand, you don't have the actual asset. But what you're actually trading is a contract designed to follow the prices of the trading pair. You're betting on what the price is moving or where the price is moving. So please leave a comment below if you want me to discuss this topic in depth in my upcoming sessions. Lastly, I don't have it here, but it's getting popular nowadays to have some stock market assets on the platform. Again, this is a derivative trade. You do not own the actual shares. Now, the advantage of this is you do not need to create an account per country. And sometimes countries don't even allow foreigners to open an account, or if they allow, it's actually hard to open an account. But the advantage is if you're trading with a Forex broker that has stock market shares on it, you just need one account for everything. You have Forex, you have commodities, you have cryptocurrencies, indices, and stock market. All in one place, right? Convenient. But the downside is they don't have every asset on the platform. I mean, they don't have all the stock market shares on the platform. What they usually have are the popular ones only. So it's a matter of pros and cons, which one do you like, but the convenience is there. Now, in conclusion, Forex trading involves buying, selling, and exchanging currencies at current or determined prices 24/5. It is the largest, most liquid market on the planet with 6.6 trillion US dollar daily average trading volume. Contrary to its name, you can trade commodities, indices, cryptocurrencies, and stocks with your Forex brokers. As a reminder, each aspiring trader is expected to have proper education, reliable internet, computer, and broker to be successful. In the next episode, I will be discussing fundamental analysis with emphasis on central bank and how it affects Forex market. If you have any question regarding this session's topic, please feel free to leave a comment below. I would appreciate if you could share this video with your friends and family. Remember, sharing is caring, and this is absolutely free. Nothing to pay, everything is free, right? You could also download the participants guide, which is on the link below. Well, I hope to see you all on the next episode. Thank you, and may the pips be with you. Bye-bye.